Hello and welcome to the Market Musings podcast, where today we welcome our favourite sort of guest on the podcast, and that is private investor. So Catrin, the head of merchandising in retail, private investor, joins us today. Hello, Catrin.
Hi Mark. Hi Kenny.
Hello, how are you?
Yeah, good, thanks. Although it's raining in Cardiff, it usually does, but we have had a mini heat wave, but now the rain's come back.
Yeah, it's raining in the Yorkshire as well. What is it like with you, Kenny?
Oh, hey, it's lovely and sunny in Scotland.
Oh, for once.
Yeah, right.
I took a wee drive to Aberfoyle today and had a nice sandwich, and it was absolute buzzing. I've never seen it so busy in my life. Yeah, it was lovely.
Oh, yeah. Good.
Yeah. And we even drove back with the hood down in the convertible, so it was even better.
Oh.
I had no jacket with me, so it was a bit cold by the time I got home. But no, all good. But no, it's great to have you on, Catrin. And obviously, we've had a few private investors on before, and as Mark says, they seem to be the most popular podcast that we've ever done. I think we had Eddie on recently, and I think just on Twitter alone, I think he's over 8,000 listens. So
that's brilliant.
There's definitely an appetite for private investors to come on and give us their story. So really that's what we're looking for from you. I don't know how far back you want to go. I mean, obviously I know you're from Cardiff.
Yeah.
You know, have you always lived in Cardiff? The floors are open. It's up to you, you know.
Yeah, I mean, I don't mind going right back to my birth. I was born in Cardiff in 1971. And I grew up in the suburbs of Cardiff. My dad was a teacher, so he was an English teacher. My mum worked in the BBC, BBC Wales in Cardiff. Mm-hmm. And then had a younger brother as well. So fairly conventional, nice upbringing I had. I went to a Welsh school, primary school and secondary school. So I am a fluent Welsh speaker. That's my first language.
Interesting.
Yeah, so I knew Welsh before I knew English, so I almost had to learn English, when I was about 3 or 4. So, that was good as well. I did enjoy school, especially kind of the maths. I did like maths at GCSE level, but then I decided to do A-level maths. And that was a disaster because I obviously loved just the basics, but then it went to another level for me. So
it does, doesn't it, at A-level? I really enjoyed science at GCSE, and I did biology. And the first day, I just thought, oh dear, I picked the wrong subject here.
Yeah. So I mean, I did geography, economics, and maths. So I did well in the other two. Well, I say well, back then, everyone gets kind of A's now, but I did get 2 B's and an E. Mm-hmm. E being in maths. But listen, I mean, I didn't get the grades I needed to go to do what I originally wanted to do, which was business in Bath. But then I ended up going through the clearing system, and I ended up in Mile End Road in London. Mm-hmm. In Queen Mary and Westfield. So I did geography there. Okay. So I turned up in London in 1989. But I had a great time. Kind of lived in some amazing places in London. My first year, I just lived off Tottenham Court Road, but I wasn't in all-girls hall. That wasn't great, the all-girls part, but we had great fun, in central London. Then I lived in Islington for a year. And then I lived in Covent Garden, bang in the centre of Covent Garden for my final year.
Nice.
So the good story there was one of my friends in college, we knew she was from Yorkshire, and we knew she was quite well off, but she was... Yeah, she was the one who kind of funded us in the last year by paying more rent than the other two. So that was really lucky. We had a great time. So after that, I kind of thought, right, what do I want to do as a career? Now, I loved shopping because I'm a woman, I guess. And I liked business. So I thought I had heard of roles in head offices, of retail head offices. And one role I was really interested was a merchandiser, which means it's like a financial planner for retail. You work with a buyer and you create plans. The buyer goes out traveling, buying stock all over the world. And the merchandiser then is the one sat back in the office on a spreadsheet telling the buyer how much she can buy, when she should bring it in, and where it should go to.
Mm-hmm.
So it's quite an interesting job because you get the balance of creativity alongside numbers. So yeah, I really, so that appealed to me. So how I thought I'd get into that job was I started off working in a shop. So I worked for Hobbs in London, in Knightsbridge.
So I've heard of it, but I'm not familiar with the area. So
they're quite a high-end clothes shop. And being in Knightsbridge obviously was great fun. One day I remember Alan Rickman, from Harry Potter.
Yeah.
And back then we were targeted with sales targets. And I remember maybe selling about £800 worth of clothes in one go, which was good, really good back then, back in the 90s, because that was about the early 90s. So yeah, I started off in the shop. I then got to know people in head office, got a job in their head office up in Chalk Farm in London, and started learning the trade there, really. I was there for about a year because it's a family business. And it was quite difficult because I then wanted a bit more experience. So I decided to go to a more corporate company, which was bigger. So I then ended up going to Debenhams after a year. You've all heard of Debenhams, haven't you?
Yep.
I mean, sad tales about Debenhams in the news this week, that it's possibly going into admin. It is in trouble. But back then, I mean, I joined Debenhams in 94 and the head offices were above their shops in Oxford Street. So I started off there allocating stock out to stores. Then I then became an assistant merchandiser on accessories departments. Then I moved to ladies departments and I was still an assistant merchandiser. So at that time, I was living around London as well. I was fortunate enough to be able to buy a flat as well in London at that time. It was 1996 that I bought a flat along with my husband-to-be at the time. We bought a flat in Chiswick for just around £60,000.
Right.
I'd be scared to even imagine what it's worth today.
Yeah, but here is my kind of money loss number one, looking back, because after about a year, I got an opportunity to get a merchandising job in Cardiff. Now, there aren't many head offices around. They're kind of in London or Leicester way or Manchester. And in Cardiff, there was a company called Peacocks, which is, I don't know if you've heard of it, but they're quite small shops, but they sell kind of value fashion clothing. There's about 500 shops around the country. So I got this opportunity to go back and I thought, I might as well take this opportunity now because I don't know when I'll get another opportunity. I'd been in London for 8 years and thought, well, I've had my time here. It's been great, but I don't want to settle down here forever. So we moved back to Cardiff and sold the flat after a year. Now, back then, I think I was looking today on just getting the figures, and we'd sold it something like 93,000. So we thought, great, we've made 30,000 in a year, which is amazing.
Yeah.
Back then, but obviously, if only I knew now what happened to the property market in London, because the same flat has been for sale, well, recently for about 500,000 to 600,000.
it's crazy, isn't it?
Yeah. But anyway, that it was great at the time to live there. Did the London thing and came back to Cardiff and worked for Peacocks.
Mhm.
So in that about a year later, I had a daughter, and then I've continued to work with Peacocks up until this time. They did go into administration in 2012, but they were bought out then as well. So the company survived, which was great. And I have been furloughed since March the 23rd. So I'm still on furlough. So that's where I am at the moment. So just waiting really to see when we're going back. But there's it is uncertain because there's a lot of, you hear a lot in the news every day, don't you, about job losses and the retail sector.
It's a bloodbath in the retail sector at the moment.
Terrible. So the retail sector's been hit hard, obviously hospitality, travel, loads of people. So, I'm still furloughed. I'm still going to be positive about going back. So that's where I am at the moment.
Right, that was a good a good explanation of the journey so far.
Okay.
So obviously we spoke before the podcast, and you probably started trading around 1995. So that must have been just a bit sort of last year in London.
Yeah. What happened with the trading was I started it by getting shares from share options from the companies I was working for. So Debenhams obviously was my first kind of foray into it. And I used to get share options, and at the time they were doing well, and I thought, oh, this is great. The money's going up. It's doubling. It's whatever. I didn't actually trade at all properly then. But then when I look at my trading account, I properly started trading in 2010.
Mm-hmm.
I also had Peacock's shares as well. They were listed. So in my mind, when I told you, I thought it was 25 years, but the active sort of trading is probably really 10 years properly, but I haven't had an interest in the stock market for that long anyway.
Yeah, it's probably a good apprenticeship, so it was in 1995 to do. I mean, lots of people are, well, Mark probably won't because he's worked for his dad's company most of his life. I mean, I work for computer firms, and I get the share deals. You put your money away every month, and you got a slight discount. It was usually 10 or 15%, and then after six months, you get the options to take the cash or buy the shares.
Yeah, exactly. I mean, at the time, I think with the Debenhams ones did well, but the Peacocks ones, I managed to buy a nice kitchen. So I just remember thinking, oh, this is great. I'm getting a really, I'm spending more on the kitchen and getting something nicer for my money, or getting more really for more than if I hadn't bought those shares or had those shares.
Yeah. So what was the moment in time that made you switch from, taking or getting the shares that the companies you were working for to actually, putting your own money on the line?
Yeah. Well, I've been very fortunate in the past to have had bonuses. Not, some okay, some not okay, some bigger than others. But then I thought, I think I'll start investing this money. So my first trade, when I look back, was buying Mulberry shares in 2010. So I don't know if you've heard, guys, of Mulberry bags.
Doesn't ring a bell with me.
No, okay. So they are designer. It's a British designer bag company, and the bags.
Oh, yeah, Mulberry.
Yeah, Mulberry. So because I loved Mulberry bags, I thought I was very emotional in my share buying. I thought, oh my gosh, I've got to buy their shares. Luckily, my first, I invested, I think at the time it was about, say, 5,000, put them into Mulberry, and they did lift by about 80%. So I did make money. So that was my kind of first trade. So I started off in the kind of retail sector with my trades. Kind of, it's sort of safer for me because I knew about the companies.
Yeah, makes sense.
Yeah, so I've traded in sort of Mulberry, Superdry, Boohoo recently, but I'll come on to Boohoo. But with I got stung though. My first sting was in September 2011. And because a friend of mine was working at this company called Alexon, I put some money into the company because she'd made money. And I must admit, I'm very guilty of listening to what people say or being influenced by people and just thinking, well, I'll do it then. So I did put money into this company, probably about 10,000, and the company went into administration. It just folded. So I lost my money there and then.
Mm-hmm. Yeah,
so
it's not good.
No, so I felt absolutely sick. You just then feel guilty, sick, how stupid you are. Why did I do that? Why was all my eggs in one basket? All those thoughts, I think, that a lot of investors have. But then you kind of just have to brush it off. And it's like when you fall off a bike and you have to get back on the bike.
It's better doing it right away.
Yeah. So it was just like, okay, I've got some money left somewhere else. I'll have a go with something else. Because you should actually be burnt and think, that's it, I'm not touching it. But there's something very compelling about investing in the stock market that brings you back, doesn't it?
Yeah, well, you'd said earlier on that you'd listened to my podcast. I mean, I had about 4 or 5 years where I just stayed away, but I was drawn back in, so I was. It's compulsive.
Yeah.
It is.
So
there's a fix that you get from trading shares that you probably can get it in other situations in life, but there's a special fix.
Yeah. Well, looking at my trading account, I think what I did after that, I diversified a bit into other areas, industries. So I went and bought Rolls-Royce, Burberry, that was still retail, and Lloyd's shares.
Lloyd's Bank, yeah.
Yeah, Lloyd's Bank. So, I mean, I dabbled a bit, nothing major, until 2016. I must have had a bit of money from somewhere again. And I decided to invest this in, you probably know this company, GKP, Gulf Keystone Petroleum.
Yeah. Oh yeah, I remember that. I remember that rise, 8p to
£5-6,
I think.
Yeah. Well, again, because somebody in work had a big investment in this company, and I just saw the share price had fallen by quite a bit. And I remember thinking, I can't remember what it got down to, but I put a bit of money into this share price, and then as soon as I did it, it started just going down further. So then I remember going on holiday that year to India, and I was on a beach in India, and I just remember looking at my phone every day, looking at a share price. Again, I'm sure lots of other investors do this. But it was just another horrible feeling because I'd been stung again, basically. So
I think the backstory to GKP was I think it went from about £8, 8 pence, to about £6, I think, at the peak.
Right.
And then it came tumbling down. I do know a few people that made an absolute fortune on the journey up, but as always is, there's people who lose money on the journey down.
Yeah. So then I had to brush myself off. I think what happens is my fault was, and I was investing just in one company and putting all my eggs in one basket.
Mhm.
And don't ask me why. I don't know why I was doing that. But I guess then obviously the gain will be bigger or the loss will be bigger.
Exactly.
In this case, it was the loss. So after that, I just thought, right, I'll get out at say I lost over 10 grand there, so that wasn't good. So it came down to the last bit of money left in that share. I thought, right, cut and run, cut your losses, because there's nothing worse than looking at a share that you're just holding on to in the hope of regaining your losses on that one. So I then invested in Boohoo, which I bought at 50p, which was a good price then, because that's obviously been up to highs of £4 something. It's had a bit of a rocky patch recently because of issues with manufacturing, about the ethics, payment of staff in their factories. But that seems to have blown over. But at the time with Boohoo, that's where I did make my money back up again. So that was great. It was back to my target. And I decided to sell. And I don't know why I invested in this company. But then I went on to the worst you could do as an investor is gas and oil exploration, which is the riskiest. I think that was like risk. I found a company called Chariot Oil and Gas.
Yep.
I don't know if you've heard of them.
Yep, I've heard of them, yep.
And I did invest a lot of money into them again. I don't know why, a whole lot in. And to be fair, they did rise quite a bit, over 100%. But I didn't sell, of course not, because I was probably glued to Twitter where everyone was saying this is going to be amazing. They're going to discover this oil or gas, whatever, and we'll all be millionaires. So in October 2018, I had my third biggest crash. So, and that was the worst one.
Okay.
So you would think at this point, right, just walk away from the stock market. But one thing in my kind of character is I'll never be beaten, or I'm very determined just to, I just always believe that, you can recover from a lot of things. So I had that kind of inner determination to recover. So I decided then what I had left, so this is a pattern that's emerging, what I had left in Chariot, which was, still a loss, still a good chunk of money. I thought, right, get out of that, made a big loss. So I'm going to put it into another company. And I stumbled across a company called eTherapeutics, ETX.
Okay.
Doesn't ring a bell.
Okay, so I kind of I think I put the money in late 2019, in 2019 or 18, I can't remember. But luckily this year, because I went on holiday in February, beginning of February, to Tenerife. And again, you're on your phone looking at what's happening to the shares. And they'd issued a placing, and my heart sank, and I thought, oh no, please, not again. But luckily, the share price reacted positively, so it did actually start climbing it back up. So this share for me kind of triple bagged, really. So and then I was furloughed, and then obviously COVID happened, didn't it? So we were in a global pandemic. and I was furloughed and thinking, because I just work 9 to 5, well, yeah, Monday, Friday, 9 to 5, or more than 5, to be honest. So always worked all my life. And when you don't work, you're just like, oh, what am I going to do?
Mm.
So then I thought, right, I've got some time now. I will start to look at learning more about the stock market.
Mm-hmm.
Even though I'd been trading since 2010, I didn't feel like, I know I didn't know enough, or I didn't know enough at all. But I had enough of an interest just to keep going with it. So something happened. I came across something called the Trading College, which was more about spread betting.
Mm-hmm.
And I did a course with them, which was only online, and you didn't have to pay anything. But what they were doing was trying to sell you a computer model or software to read the charts and to react with it.
Mm.
At this point, I was telling my partner about this, and he was just a bit dubious, saying, I'm not sure about this. So he bought the book, The Naked Trader, Robbie Burns, and said to me, right, just read this. So basically, I read that, and I'm glad I did, because I didn't go ahead with paying. It would have been paying something like £2,000.
Yeah.
And I did try this kind of spread
betting.
And to be fair, it wasn't for me at all.
No.
So luckily, that book, I feel, saved me from that.
Uh-huh.
And I learned a lot from the book, and I decided to give it another go. So that was in April this year. And I've basically put my investment into I'm in 9 companies. My portfolio company has 9 companies.
It's a lot better than one.
Yes. So I have a mixture across the biotechs. So Avacta being the biggest one at the moment. I really like the look of that company, which is very popular, isn't it? I did put I'm in a bit of mining, so I have always kind of invested in AIM, which is very risky. So I wanted to put something in the FTSE. So I put a bit into Rio Tinto. Okay. Which is a solid company.
Yeah, yeah.
But again, I have a friend who works there. So maybe because I knew about him working there and read up about the company because I know he works there. I've gone back into Boohoo. I'm in Gretland Gold.
Gretland Gold, yeah.
ODX, Tills, PYC.
Yeah, Psychometrics, is it?
Yeah, Psychometrics.
Yeah.
And on Friday, I bought into Supply Me Capital.
Oh, is that SYME? Yep.
Which went crazy last week, and I got to say that because of the Twitter, I just felt it feels like this has got more on it. But the good news is that my portfolio is over 400% up.
That's tremendous. I mean, considering you had 2 or 3 near wipeouts.
Yes.
Yeah, and reference to that book, actually, that book's been out for a while, because I remember reading that back in 2009, maybe. So it has been about a while, and it's quite a good book.
Yeah.
Yeah. And it gives you all the stock market terms and all the stuff that you need to know. It's a nice, easy read, as long as you don't look at it. As long as you don't look at the front cover, it's a nice, easy read.
I think I bought it on Amazon, so on my Kindle. I didn't have to look at the front cover.
Yeah, but No, well, it's good that you've managed to definitely diversification. I mean, I've learned the hard way as well, Catrin. So I've been wiped out before, and
Yeah.
it's not nice. But it's, you've got to start spreading the love about.
Oh, absolutely. And you've got to actually spend a bit of time reading about the company you want to invest in and what do they do? Are there any red flags to it? I know you're going to get, I'm not saying I will get stung again, but not hopefully to the extent I have been. But I just want to really, want to give the message of hope out there to people if they are in a situation that they are down.
Yeah.
That just keep on going type of thing and have the belief that you can get back to where you need to be or try and get there, because it can happen.
Yeah, absolutely. Yeah. What is it you look for then when investing in a company?
Well, I do tend to hold for quite long. So I was wondering, am I going to start day trading and be in and out? But I'm not that type of trader. I kind of hold on to them, maybe for too long, actually, because I see them go up to their highs and then come back down. So obviously timing is everything, isn't it, in the stock market? So you're never going to be able to buy at the lowest and sell at the highest.
No.
So it's finding the mid, giving yourself some kind of exit prices, but I'm not very good at doing that. So I tend to just hold, and I'm probably on the lazy side.
Okay.
So I do look for companies really that, I don't know, something exciting, like obviously something that's going to have a gain in its share price. There's something that's possibly trending at the moment, like, for example, Avacta is really exciting. If this 10-minute test does come out, wow, if it blows the market, that's something that's positive for everyone. If I happen to be making money out of it, that would be amazing. But I do really like companies who have strong ethics as well, I guess, and make a difference.
Okay.
Saying that, I did invest into Boohoo, which probably hasn't had the best track record, but I know this happens a lot in the retail industry, and it's not necessarily of their control a lot of the time. But as long as a company is showing that they are remorseful and trying to change, then...
So are you sort of are you sort of following a story then? Is that what you would say? Perhaps you're buying into a growth story? Yeah,
definitely. That's a good way of putting it, because I like the growth, to see a company. But basically, I like to see people's vision who run these companies coming together and actually coming into fruition.
Sure.
Because, they're brave in what they're doing, raising a lot of capital to bring their kind of ideas into work. So they work very hard, I'm sure, a lot of these companies. So it's just good fun also to be able to, when I kind of, Twitter's great, obviously, about, you pick up on a lot of stocks there, but it's hard to know who to believe.
Of course.
Who the good guys are, who the bad guys are. But I won't knock Twitter because because I'm interested in, hang on, I'm looking at so have a look at my stock watch. I'm watching, I thought I was watching 20 companies. I'm actually, on my watch list is 50 companies.
Right, yeah.
And I thought, oh God, I didn't realize it was that much. But somebody like Alba Mineral Resources at the moment. Because are they the ones in North Wales, I think?
Okay.
I think the attraction with Alba is to a lot of investors is that the Welsh gold.
Yeah, that's it.
It fetches a premium.
Yeah.
because
So,
all the royal family, I don't know if you know this, the royal
yes,
family got all,
use
yeah,
Welsh gold. And of
yep,
course, because of the Welshness and the Welsh of that, I probably will look at that seriously to try and invest into that.
Mm-hmm.
Yeah, so everything that I think is interesting, that I have an affinity to, anything, yeah, basically.
Okay. Do you ever take part in placings or not? Is it just on market?
No, I never take part in placings. No,
Okay.
I don't know why. It just don't interest me because I think often an initial IPO is quite interesting, but I never know if the price is. You might get it lower.
Yeah.
So I just kind of wait.
Yeah, the IPO is always a funny one, isn't it? Because
Yeah.
you can guarantee on day one it goes up or down.
Yes, exactly. Knowing my luck, it would go down if I bought it. And then there's the actual placings, and there's been so many recently that so many of the biotechs, I mean, it's becoming common every week that somebody's placing. And
Yeah.
just think, well, I've seen lots of those go down below the placing price. So
Yeah.
you just buy it on the open market. There's probably no point.
Mm-hmm. Sure.
yeah. It depends. I mean, some of the placings, obviously, you get warrants attached, or there might be some other benefit as well.
Okay.
It does have its advantages, but it's just being with the right broker. You know, you've obviously got to have an account with the broker to get involved in placings. But no, Alba's interesting. I've been in Alba before, but I probably wouldn't go back into Alba. In saying that, I was in Red Rock Resources before, and I swore I'd never get back into it. But I've found myself buying shares in the last couple of weeks. So never say never. But
no, exactly.
Alba's obviously got a Scottish connection as well with the name. So there's a bit of Scottish and a bit of Welsh in there.
Yes.
It's been around forever, Alba. I think it's been around since about 2006 or 2007.
Oh, really? It's pretty cheap, isn't it? What's it got? What projects does it have? Do you know?
I think its main project's the Welsh Gold project.
Welsh Gold, I think, and more excavation of it, is it? I think.
I think I seen a headline last week that would be the first drilling or the first exploration in years. But I think Welsh Gold fetches 3 times spot price, Mark. So it does.
And the gold is at a very high price anyway at the moment, isn't it?
Yeah.
Yeah, of course.
So it's a strange one because the royal family use the Welsh gold to make all the jewellery. Obviously, Welsh gold has this huge.
Oh, it's got a premium. Oh, I see. Yeah. Okay.
Yeah, so if it's $2,000 an ounce, it's for Welsh gold $6,000 an ounce.
You're joking?
Nope.
Welsh is best, you see.
Oh, I didn't know that. That's an interesting fact there, Kenny.
Yeah, I'm sure it's 3 times. Somebody might when we put this podcast out, correct me, but from memory, I think it's 3 times the normal price. But
well, okay.
There we go. Yeah.
Interesting.
So you sound like you're quite emotionally involved with some of your stocks, Catrin.
So emotionally involved.
Yeah. So a few people I've spoke to, and I'm starting to understand it now, is they say, we hate every single one of our stocks, and that way it's easy to sell.
Yes. I know. I think it's so psychological, this game that we're in, that you need to analyze yourself and why you do the trades you do. And I think when you press a button for a trade as well, buy or sell, my heart always feels like it's dropping into my stomach. Because I think you're making a decision and you're like, is that the right decision I'm making? Am I going to press yes on that quote or not?
Yeah. Well, all you can do is do your research, isn't it? Look at how valuable the company is, and just make a decision of yourself whether you think it's going to, if there's growth there still.
Exactly.
And you've got to go with your own convictions. I mean, and Kenny's right. I mean, you shouldn't get emotionally attached to them unless, for example, you happen to be very close to one particular one for any given reason. And you really are, very close to the people that run it. I don't mean like your family or anything, but you've spoken to them, and you regular contact. You really love what they're doing. You trust them. You like the projects, and you really do think you want to be part of the growth story from almost, grassroots up until further. It's very rare. You're not going to get that with every company. You might get it with one or two, I'd have said. But emotions are dangerous.
Very.
Yeah, we've actually got a girl called Leah, Catrin. We should maybe get you to do a podcast with Leah, because she's what was her degree in, Mark, again?
Psychology.
Already.
Psychology.
There we go. How did I forget that? So she loves talking about the emotion of investing and how investing is very tribal and
fear of missing out.
Fear of missing out. Yeah, so. Yeah, it might be interesting to get her to have a chat with you, because she's done a few interviews of directors and stuff like that. So we'll see if we can hook you up and you can maybe have a chat. And
that'd be good.
Interesting.
She loves it. Obviously, that's got a degree in it, and
wow.
Yeah, she likes to get into the mindsets of investors. But there we go.
So spreads. Sorry, I was going to ask about spread betting. How long did you do it for? Was it literally a couple of days?
Yeah.
Yeah.
I had is it IG?
Oh yeah, I did the same thing.
I'll have a go. I'll have a free, a trial account. I just couldn't get my head around it really, and I'm not very good at laying or shorting. That goes against my. I don't know. I can't. I just can't do it, and I can't think quickly enough to.
No, it's it's too quick.
Yeah, it is too quick.
I did it with IG as well on a free account. And I did the demo thing, and I did quite well. So I thought, and I can't wait. I want to get, a demo means nothing to me. So I want to get in and make money. And I think I was doing something like GBP versus Euro. I was betting against the pound. I don't know if it was around a sort of little bit after Brexit thing. So the pound was still a little bit weak and sort of thing. And I betted against the pound, and I think I made about £800. I thought, that's great. Now I'm going to I'm going to flip my position, which worked for about 10 minutes. And then it just disappeared, and my £800 turned into like a £400 loss. This is in 8 hours. This is from 9 o'clock, like in the office, getting in at work at 9 o'clock, and then by 5 o'clock, that's the situation. And I was just like, oh no, it's nuts. I can't handle this.
Mark, that's why I pay somebody for an algorithm, and that
exactly. In your forex trading, it's better.
Yeah. That runs in the background, and I just check it on the app. That's part of my diversification as well. So I threw £5,000 into these guys, and I think we're due to do another podcast with them very soon. But my 5,000 is up 16% in 2.5 months.
That's good.
Which is pretty good for I don't need to do nothing. So there's lots of different opportunities out there. So this is one that I'm trying, and we'll see how it goes. Maybe after 6 months, I might double my stake. But it's interesting. But again, that's quite addictive because it's on the app. You can watch all the trades and what's going on. So I mean, you can get stuck to your phone. Waiting for a trade to close. You end up talking to it and saying, why are they not closing this trade? It's well in profit. Why are they not closing it? But no, I'll just leave it to them. They're the experts. But no, it was great to have you on, and I would like to hook you up with Leah if you would be up for that.
Yeah, okay.
And she's Scottish as well, so.
Oh, is she okay?
Yeah. She's easier to understand than Kenny, though.
What's in, Mark?
She's easier to understand than you.
Yeah, I'm a wee bit rough. She's a bit smoother, so she is. Definitely.
No, you're right.
Your accent is like that comedy guy. What's his name? R.C. Nesbitt.
All right, okay. I'm not going to take that as a compliment because he doesn't. No, actually, that's very close because R.C. Nesbitt actually, it's where I came from. He was only 10 miles from me.
Is that Glasgow?
At least he was in Ayrshire. I don't know where he was originally born, but he lived in Ayrshire. Gregor Fisher. He lived in Ayrshire, so he did. So that's where I'm from originally. Although I was born in Glasgow. So there we go. But on that note, it's been great having you on, Catrin. I think, Mark, have you anything else to add before we let people go and enjoy their Sunday night?
No, I don't think so. I guess I just wondered, you said you did a degree in geography.
Yes.
Yeah, and you invest in some mining. I mean, that's just where mine and Kenny's interest lies. Did you get anything from your geography degree that helps you in your mining stuff? Or do you have an interest in geology in general?
No, I did the other side of geography, which is human geography.
Oh, okay, human geography. Right, okay.
So
okay, fair enough.
that's more to do with the environment and people. And,
town planning. Yeah, okay.
Yeah, so no, I think with mine, I like gold, so maybe that's why.
Okay, fair enough. Yeah, fair enough. Funnily enough, human geography was the part that I excelled in my geography.
Was it?
Yeah, I did. I don't know why, but town planning and that kind of stuff, I remember it very well. It was my highest. My teacher was amazed at me. He was just like, I don't know why you get this so easily. It's one that everyone struggles with, but the rest of it, like volcanoes and geology, I was not very good at all. But,
not me.
No, it's been nice to talk. Nice to talk to you about another private investor. It's nice to have you on. Thank you very much for your time on a Sunday evening, Catrin.
Okay, pleasure. Nice talking to you too as well.
No worries,
Thank you for having me on.
Yep. Cheers. Speak soon.
Thanks, Catrin. See
Bye.
you. Bye-bye.
Bye.
Thank you for listening to another podcast from Market Musings with Fairbairn.